Hello, everyone. This is Harold von Hayden. If you're dialed into the Arctic Securities presentation webinar on deep adoption of hydrogen, you come to the right place. I guess we'll wait for another 2 minutes until we really start so that we are sure to have everyone online. So I'll be back in about 2 minutes. Hello, everyone. This is Harold von Hayden again, and I'm very happy to wish you all a warm welcome to Arctic Securities webinar on a case study on deep adoption of hydrogen. Is Europe in the forefront of the energy transition? We are very happy to have with us Hans-Gunnar Novik, our senior analyst on renewables, introducing and going quite deep into the topic of hydrogen, which has emerged as a quite a kind of hot topic in the world of renewables, especially over the last 6 to 12 months, as the global but also European ambitions on the renewable shift have become more concrete. And it's emerging as a key item in the energy transition, enabling the deep adoption also of solar and wind energy. Just to clarify, this may be absolutely clear to many of you, but maybe not to others who don't follow this topic on a daily basis. Hydrogen is not a electricity producing technology. It is a medium to store or transport energy, and in this case, hopefully in the future, especially renewable energy. So it is not a competitor to solar and wind. It is a key enabler, storage and transport medium. That is just a good thing to have on the back of your head as we go through this. But enough from me. I'm also, just as a practical information, we obviously are very happy to take questions. Please use the chat, which is available here as part of the Teams technology, and we will try and answer most of the questions towards the end of the session. So hereby I leave the word to Hans-Gunnar Novik, our senior analyst, as I said, on renewables, part of our efforts to deepen and broaden our focus within all sectors of Arctic on renewables, both with it analysis, corporate finance, and broking. So here we go, Hans-Gunnar.
Thank you, Harald, and good day to everyone. So let's dive into it. In this session, we will look into some implications from the very ambitious European Green Deal prospect, which became known just before New Year. and point to some impacts on different markets. As you can see from this this first slide, I call it key takeaways, net zero policy implications. A basic assumption here, and will be through the whole presentation, is that we will discuss the very ambitious goal of net zero emission in 2050, which is outlined in the Green Deal, and which is the only scheme that actually answers to the goal in Paris Agreement regarding temperatures on Earth. So, as you can see that the EU power demand in this net zero policy could triple from today's level, from 2,700 terawatt hours to close to 8,000 terawatt hours, given that the net zero policy actually realizes, and given that green hydrogen, as it is called, becomes the adopted, the choice of adoption for the market in the years to come. But as you can also see, the growth in the power market could be significantly lower, given another route for hydrogen, called blue hydrogen in this, based on fossil fuels, hydrogen production based on fossil fuels. Another key takeaway is that the electrolysis demand could skyrocket to 700-800 gigawatts of installed electrolyzers by 2050. Again, if the market adopts green hydrogen, fully adopts green hydrogen, and totally leaves behind the fossil route. However, if the fossil route becomes the dominant pathway for hydrogen, we will see significantly less demand for electrolyzers. And this goes as well for offshore wind. Demand for offshore wind will, in the green hydrogen scenario, be a lot higher than in the blue. Regardless, as we can see from the EU power demand and the offshore wind demand, we will see significant growth regardless of the hydrogen supply pathway. All right. At the bottom of this slide, you will see a lot of illustrations of different technologies that has to be adopted by the market to actually reach the net zero policy, to reach the aims in net zero. From the left, we see electric heat pumps. We see rooftop solar, domestic rooftop solar. We see battery electric cars. We see hydrogen boilers and hydrogen fueled micro combined heat and power, the domestic use. We see fuel cell used in as drivetrains in road vehicles. All of these technologies must be adopted at scale, and none of these technologies today have are even close to being very relevant. maybe except for the heat pump, which is a going business out there, covering a small share of the underlying market for heating, and rooftop solar, which is also a business going on at the moment. Rest of these technologies we see is in the very beginning, and of course that represents the biggest uncertainties for the net zero policy. Will the market actually adopt battery electric cars, fuel cell drivetrains, and hydrogen for heating? And of course, in between these major marketplaces like EU Power and Electrolysis and offshore wind, we have this multi-trillion euro scheme of solar and wind energy infrastructure, manufacturing, service industry, digitalizations, and so on. If it fails, if the market fails to adopt the technologies at the end use of the line, of course there will be less demand for the midstream and upstream markets as well. The European Green Deal is has been a topic for a few months. The public motivation is environmental and social jobs, but I want to point out one more underlying motivation, which is probably as important to the EU politicians, and that is the geopolitics of the Green Deal. It has been a dream. It has been a decade-long dream for Europe to become less dependent on other states for energy imports. And the description of the Green Deal is a solution to that. It's a decoupling from dependency of other states. Another thing to point out is that if this was only a EU politic, a deal for a political vision for EU, one could perhaps be more skeptical. However, this time it seems the politics is gaining increasing support from big oil utilities, major manufacturers, international institutions, big finance. It's gaining traction from technology evolution and political commitments across the world. So this time it seems a little bit more likely that the Green Deal is part of something bigger. The EU Commission has described the whole Green Deal pretty much in detail. And the cornerstones of the politics is harvesting solar and wind energy. And why? Because it is local, it's abundant, and it's a decoupling of dependency from imports. And another cornerstone is deep electrification of the economy. Of course, with heavy focus on improving energy efficiency and regulatory and financial framework. However, to reach the net zero, the goals in net zero, hydrogen is perceived as key, as the enabler of that to happen. Without hydrogen as a key element in this strategy, the perception is that you won't reach the net zero emission goals. And in the Hydrogen Roadmap 2050, a white paper study from the EU Commission, they are pointing at enabling net zero, you need to decarbonize transportation and heating and power for buildings and transportation, along with industry, decarbonize heating demand and feedstock in industry. So what does it mean when if we accept that perception, if we accept that to decarbonize transportation is a key to the net zero? Well, the fleet of vehicles in Europe today is above 300 million. And to gain net zero, to decarbonize the fleet of road vehicles, as well as navigation and aviation, we have to as described in the white paper, 250 million battery electric cars in 2050, above 40 million fuel cell electric vehicles, almost 2 million fuel cell electric vehicle trucks and buses. In addition to that, to actually reach the net zero goal, we have to transform the housing sector, and the heating demand must be diverted from burning natural gas to use hydrogen, along with direct use of electricity in heat pumps. And that is also staggering numbers. Above 50 million houses will convert to so-called micro CHP, fuel cell combined heat and power, and hydrogen boilers, both of which are fueled by hydrogen. As in industry, hydrogen has to overtake for natural gas, and hydrogen will maybe as a renewable fuel overtake oil products and other fossil fuels for feedstock in industry. So what is actually happening here is that by 2050 we will totally shift from a fossil fuel based supply system and convert to a hydrogen supply system and renewable electricity supply system. And as illustrated here, we can see that hydrogen can be supplied from two pathways. One called the green, which is electrolysis, and the second is the blue, which we can call the fossil pathway, reforming natural gas into hydrogen, combined with carbon capture and storage. And of course, depending on which one of these hydrogen supply pathways is adopted, it will have a significant impact on the markets. It will not change the fact that you will shift to renewable electricity combined with the hydrogen in the end use, but it will change the outcome of the upstream markets like demand for power. So since blue and green hydrogen is providing very different outlooks for huge markets, we have to take a look into the hydrogen pathways. What is the advantages for the blue the blue hydrogen, the natural gas-based hydrogen? Well, big oil is part of the stakeholders in that value chain, which is an advantage regarding access to capital and access to political influence. And it is perceived lower cost. However, the CCS is key here, and I will come back to some uncertainties around that issue. If we look at the green hydrogen, what advantages can we find? Carbon-free, yes, which is slightly different from the blue hydrogen. It's not completely free of carbon. It is green hydrogen is scalable, perceived, and it is perceived that green hydrogen will have declining costs along with upscaling. Industrial scale production of hydrogen, green hydrogen will lead to declining cost and maybe reach parity with the alternatives further out. But of course, the geopolitics is a heavy argument for green hydrogen. Because green hydrogen is scalable, you can place it in principle everywhere, and as such you can utilize the abundant access to solar and wind, and you don't have to be dependent on the fossil routes anymore. So as it stands right now, I would say this is highly speculative, but I would say that the green hydrogen pathway looks slightly favorable over blue. But of course, risk is that that can change very, very quickly. So to discuss the blue a little bit further, the carbon capture and storage is key to blue. Without the carbon capture and storage solution, blue hydrogen will not exist. So, and will not be a competitor to green. And I've already pointed at some political uncertainty around the blue hydrogen regarding energy security and the fact that it's not net zero emission technology. On the other hand, we see some support through governmental support. UK has recently spent 800 million pounds in a public CCS infrastructure fund, and Norway is also expected to support the Northern Light project, a CCS project described. So there are some support, but in the bigger picture, this is pretty minor. The CCS cost varies widely between projects and pending the separation of carbon dioxide and the disposal. It is really not easy to see where the cost of CCS will be. There are the cost projections are widely different, from pretty low, very low actually, to very, very high. So it's a huge question mark regarding the success of blue, at least for now. All right, so what will be if we look into the net zero and the deep electrification, and we say that the market will opt for green hydrogen 100%. We will see that due to the demand for hydrogen in transportation and heat and industry sectors. We see here that demand for power will rise from today's 2,700 terawatt hours annually to almost 8,000 terawatt hours annually. Seeing huge contributions in demand for power from sectors like heavy duty transportation and house heating and industrial heat and feedstock. On top of that, on top of new demand, Europe also has to continue cleaning up the power production that today is based on fossil fuels. So this is an extreme scenario, but it is possible. However, if we look at the same scenario, we solve the net zero, but let's assume that the blue hydrogen actually succeeds and becomes the dominant pathway for hydrogen. We see that demand for electricity grows much more modest. Still a significant growth from today's level, but not even close to the scenario described by the 100% green. And the same goes for electrolysis demand. If the market adopts the green hydrogen route, demand for electrolysis will be tremendous, up at 750 gigawatts in 2050, up from approximately 0 now. And if in the other scenario, in the blue hydrogen pathway scenario, the demand for electrolyzers will be much less compared. Still a very still making a new market probably, but not even close to the green hydrogen scenario. And the same with the offshore wind power, which is predominantly driven by the demand for power. So in if the market adopts green hydrogen, demand for offshore wind will probably follow, and we can see a market in 2050 at 500 gigawatts. That's up 20 times from today at 25 gigawatts. While in the blue hydrogen scenario, you will reach approximately half that size. Still, we see a 10 times expansion from today. This is simply this scenario is simply made from an assumption of 30% share of all new electricity demand coming from offshore wind. And why are we so optimistic of the offshore wind power? Well, not so much more than that we actually have, Europe is in a unique position, having the world's largest offshore wind potential. It is described in the EEA as a potential that in theory could cover the whole electricity demand in the world today by far. So it is kind of logical to see that offshore wind will take a fair share of the demand for electricity going forward in a net zero, if net zero should materialize. Of course, we see risks in the picture. We see we look for signposts for Green Deal viability. For example, the COVID-19 is definitely representing risk to the Green Deal viability. It slows the policy making. It's hitting manufacturing and engineering, and it lowers the investment capacities. So definitely there must be risks connected to the COVID-19. In addition, and partly because of the COVID-19, price environment of oil, natural gas, and coal and power has really shifted recently, and this new price environment I describe as toxic for renewable economic viability in general. But of course, this is we are looking at this Green Deal in a 30 years perspective, and at least for now, the oil price and the price of fossil fuels and power is a short-term issue, short to mid-term issue. Long-term, it would probably not. we wouldn't expect the price levels we see today to sustain for decades onwards. So what signposts are we looking at? We are closely looking at the political actions taken, subsidy schemes, green stimulus, binding targets, and so on. We're looking for signposts in the financials, green bonds, ESG. How are the trends evolving? And we are looking for proof of viability technologically and economically. For example, as we started looking at the first slide there, we said that fuel cell electric vehicles is likely a decisive technology for the net zero achievement, and we are specifically looking for technologically and economically breakthroughs in that sector. Fuel cell is key, and we need to keep an eye on what is happening there. Lately, we have seen steadily more major industrial companies supportive to the ideas of the Green Deal, supportive to the bigger idea of the green the green shift. We see names like Shell, BP, General Motors, even Goldman Sachs, BMW, Hyundai, Bosch, Daimler, ABB, Total. More and more companies are making commitments, not so much capex yet, but commitments in their plans for the future. And of course, that will be one thing that we will follow very closely. And to finalize this presentation, I will just for those of you that is not following this too closely, you can find some pleasure in diving into an illustration of the hydrogen economy. There are numerous illustrations of the hydrogen economy on the internet. This is one of them, but it is pretty explaining. It really explains the value chains, and it can be useful for anyone wanting to understand where are the bottlenecks, where are the bottlenecks now, where will the bottlenecks be in the future, where are the stumbling stones, and so on and so forth, the risks and opportunities. So I guess that was it. Yes.
Okay, thank you, Hans Gunnar. So we are, as I said, I forgot to mention that in the beginning, but this presentation is recorded. So if you want to revisit it or see it again, see it at a later time, you can click on the link of the invitation, and there you should find a recording of today's session. And as I mentioned, we are open for questions on the chat, which we can dive into now with Hans Gunnar. The first question I have is, at least you've been through it already, Hans Gunnar, but I mean, in terms of the risks, I mean, we've seen, we've heard announcements from also some of the big companies you mentioned, but in the past 5 years ago, 10 years ago, that they will go big, whether it is within fuel cells for cars or trucks, for example. But many of those have either not materialized, or they have come out pretty small. I mean, what is the difference this time? How will they overcome the risks, and when do we really see that this is taking off, the hydrogen economy?
Well, frankly, what I see when I dive into the question of fuel cells, it's a many decades old technology. It is working. The problem, in a way, is that it hasn't proved viable, or maybe technologically, in large numbers. The Asians are the most aggressive, pursuing solutions with fuel cells. Japan, South Korea, especially. They have been running programs trying to scale up the use of fuel cells, but so far it hasn't really proven a success. What we see right now is steadily more car manufacturing, truck manufacturing companies committing to the idea of fuel cell technology as drivetrains for trucks and the larger cars. But the jury's out. We haven't seen proof so far, so I cannot say. This is one of the big risks for a part derailing of the Green Deal, but we simply have to closely follow and see whether we can find signs that this is finally entering scaling. So yeah, that's the best I can say.
Okay. Thank you, Hans Gunnar. It seems like your presentation was crystal clear, since we haven't had any more questions. You can, of course, always contact me or Hans Gunnar if you want to discuss this more in person. But with those words, I thank you, everyone who's been listening in, and up until next time. Thank you. Bye-bye.